everyone, this is Dominique Aubrey, the CEO and founder of the Black Woman's Guide, and today we are talking about growth and scalability. It is April, and so it is the end of Q1. We are launching into Q2, and so it's a great time to talk about how do we grow and scale our business. So from your initial investment that you make into your business to the point when you actually get a profit, you have to have, the proper financial tools or even the proper financial mindset, really, to manage your profits and losses and manage your expenses and oversee your budget in a way that's thoughtful and represents where you are today in your business as you grow. So your financial growth is more than just a profit and loss statement, right? It represents when you might be, making an exit. Maybe you want to leave your job. Maybe you want to move to a new area. Maybe you want to support your family, right? And so how you manage your finances speaks to your understanding of when those other things will be possible in your life. So I wanted to share a little bit about what we do at the Black Woman's Guide. Again, I think it's really not just important to tell stories of what other women I've talked to are doing, but also tell stories of what I've been doing, what we've been doing with Black Women's Guide, and what my experience, the experience that I've had, and how that's lent itself to me having a perspective and an opinion around how we should go about this process if you're just starting out. And I just wanted to share a little bit about the Black Women's Guide specifically, and just really start the conversation from looking at your business from the beginning stages. Growth is not always based on investment, but they're related. So you probably have seen people that just get this viral, they go online, they put something up, and all of a sudden they get all this press and all this stuff, and all of a sudden their business starts to grow, right? We never hear the story of so it went up, did it stay up, or did it go back down, right? We never hear that story. Growing too fast, then you're prepared to actually sustain, right? We also know that that's not the common story, that the majority of people plan their growth thoughtfully. It's not a fluke, right? We're not waiting for someone to save us. I talked to a lot of women who, I had a woman a while ago who's in Florida actually who made t-shirts. And then when I asked her what, she's also oh, but I really want to paint. And have you ever heard of water ice? I'm thinking about opening my water ice stand with this dude. And I'm just what? It's just all over the place. Because what we're doing is we're not really betting on ourselves. We're really looking at someone else to solve our problem for us, right? And so you can't really operate your business like that. Every new idea, every cool opportunity, yes, it might sound good. Yes, it might give you some cool little press and so on and so forth. But you can't thoughtfully grow your business based on everyone else's kind of ebb and flow. And if you look at the people long term, I'm not saying they didn't get lucky. I'm not saying they didn't get some good people around them. I'm not saying they didn't have some really great opportunities that became bigger than they thought they were. I'm not saying any of that. I'm just simply saying that they did not bet their business on those things. And I mean a lot of women who are betting their businesses on, well, maybe just someone will find it and call me, or maybe I'll meet someone here and they have this cool idea about some partnership we could do that would help me go this direction. And so what happens is your business is not in your hands, it's in everyone else's hands, because you don't have a straight and clear path on where you're trying to go and how you're trying to get there. If you actually said out loud, I know that I want to get to this point, I want to make $100,000 in 18 months, and I know that if I had no help at all, these are the things I would do, then if someone does help you, it's going to be in relation to the things you've already laid down for yourself. It's going to optimize those things and help you move forward on them versus introducing a whole new thing to your business, right? And I'm not saying, again, that someone might not come along and say, hey, have you ever thought of this? And this might be really useful. And that might be really useful. And it might make sense as well. And maybe you should consider it. But can you consider everything all the time in every scenario? No, you can't. So when it comes to your finances, it's really tied to your understanding of your business growth. And you cannot look outside yourself to figure that out. And every cool opportunity, every interesting conversation is not necessarily a way to build your business. You should not look at other people as a means to an end to building your business. Because a lot of people say, oh, I want to partner with you on this. We should do a cool event. And, we should do a blog post together. And we should do a podcast. And yeah, that's all great and gravy. That just doesn't pay my bills at the end of the day. Right? And if I do all this stuff and I'm on a path to sell t-shirts and all of a sudden I think I'm going to do my event with you, it takes me off course 3 months, what was it really worth? Right? Maybe I sold more t-shirts, maybe I didn't sell more t-shirts. Maybe I spent a lot more money just to sell those t-shirts, right? Just to set up for that event, right? So we have to think more deeply about how we structure our business and how we structure our finances to support our business growth. So all that to say, growth is not always based on investment, but they are related. They are related in the reference of how fast do you want to grow, right? So the idea of breaking even or managing your budget or profit margin is just a complex one, and there's things that we should be thinking about or considering, right? ask yourself the question, like what's losses? Losses over what period of time? 2 months, 4 months, 8 months, 2 years, 5 years? How much losses can you incur? How much money do you want to invest in your business? And for how long? Is it $1,000 over 6 months? Is it $20 a week? Like, like you have to think deeply about that. So with that kind of being said, let's think through some simple things you should understand, to understand like your money situation pretty much. So the first is, I think if you're starting out and you're not at a point yet where you have steady revenue every month for 6 months, like, so you're like, I'm not in a place where I'm getting reoccurring revenue, number one, or if I'm getting reoccurring revenue, it's not the same every month. It could be up and down and different things. Now, if you know that your business is seasonal, that might make sense as well. But if your business, if you're looking at it, you're saying, you know what, I'm not in a place where it's steady, but I don't feel like it's steady, this is the first thing you want to do. First, what's your 6-month goal in terms of how much money you want to make? I'm not saying, so this is interesting, I'm not saying how many widgets do you want to sell. I'm not saying tell me all the variations of t-shirt prices that you have. I'm not saying how many likes you want to get on Facebook. If you're not making any money, you have nothing to sell anybody, then you're not really in business yet, because you're not really selling anything, right? So that might be okay. We call that like a setup phase. Like, how do I build up to a point where I can sell something? That's a different thing. But the first thing you want to do is actually set up a sales goal. If you're selling a product today and you have something to sell, you should be creating a sales goal, right? If you don't have a product to sell, you should be setting up an awareness goal and building a product in the background. But we're talking today about profit and loss and talking about like growth and scalability. So I want to talk about sales. So if you are already selling something, you want to have a goal of how much money you want to make over the next 6 months. It doesn't have to be super high, right? Because that could create anxiety. It should not be so low that it's not inspiring. It just needs to be kind of like that just right number, right? That inspires you but doesn't overwhelm you, and gets you excited to do the work. And that number is up to you, but it's important that you have that number. And I talk to women almost every day who do not have a number. Oh, I want to be in business. I want to do all this. Well, how much do you want to make? Oh, I never really thought about it. It's called a business, not a hobby. And I'm so serious about that because I feel like so many times I was talking to a woman today about her daughter who is in art school, or she wants to be an artist. And then so she went to school, got her degree in art, moved to New York, and now she's in New York. And her mentor went to Yale to get her, master's in art, and she's an art teacher, an amazing artist, but she's an art teacher, a professor. And she's like, well, maybe I'll be an art teacher, an adjunct. So I'm like, so you're going to go to Yale to get a master's to teach art, to be an adjunct, to make like 30 grand a year or 40 grand a year with like $100,000 in school debt for your grad school, because you want to be an artist, but you're not really an artist, you're a teacher. And the reason that occurs is because, yes, you want to do the work, you want to make art, you want to make your craft, you want to make the thing you want to give to the world, but you don't want to run the business of your business. So for you to do the thing you love all day and every day, you have to get good at the business of what you do, not just doing the thing. A lot of artists, the whole idea of a starving artist is someone who wants to make their art, but doesn't want to understand the business of how to sell their art. You need to be able to sell your art. Okay, that's really, really important. So to sit there and say, well, I don't have a number, I just want to engage people and help the community, then you don't want to be in business. And if that's the case, you should go get a job and do this on the side, because it's a hobby, because you really do not have the chops to build the business that you want to see, right? You want to just do all the things about making the art, having the great conversations, having someone compliment you on the thing, maybe selling a t-shirt here or there, making people feel good, making some side money, going to Applebee's or whatever you want to do, right? Like it's side cash, but you're not thinking about long-term, how do I build a business around this thing that I love so much? So you need to have a goal. It's not an option. If you are selling a product today, you need to have a 6-month goal, right? And actually probably in May, I'll release my numbers and my information around what I'm thinking about when I think about the next 18 months. My goals are a little bit longer term, but I think it's still useful to understand like what my goals are over the next 18 months. So first, what is your goal? What is your 6-month goal in terms of number of sales, right? Number one. The second thing I would consider is how much money do you have to spend on your business? And then what I'm saying is how much money do you have available? You write cash, literally. So this is about carving out a minimum business budget, and it's not about looking at the things that you want to spend. It's not about saying, I want to spend this much on a website, I want to spend this much on whatever. It's not about looking at all the things you want to buy. It's just looking at your budget and saying, how much money, if I had to carve out some money, like you would do for savings, how much money could I allocate toward my business? Is it $50 a month? Is it 500? Is it 30 a month and I'm saving up every quarter to spend $120 or something a little bit bigger for my business? Because that just dictates your growth approach. Now, there are a lot of businesses who do a lot of great work just leveraging social and engaging in social, but don't get it twisted. Just because they're not paying for advertising doesn't mean they're not expending money on things to get the word out, right? Whether they're doing events, whether they're doing promotions, like, right, all these different things, whether they're taking pictures, whether they have to get, a new phone, whether they have to get materials that they can lay out in their space so that it's all branded. Like, don't get it twisted. People are still spending money behind the scenes. You don't have to, but you can. And the question is for you is just how much money do you have? Like, are you aware? If you have no money at all, that's okay. You're just starting from a different point. Does not mean you cannot start. It means you're starting from a different point. But it is important that you look at your budget, just like you look at your time, and you say, how much time or how much money can I carve out to support my business growth over time? If I do need to buy something, do I have the money to buy it? If I need to buy a camera, do I have money for that? If I need to buy a Diva light, do I have money for that? If I need to buy supplies to make cupcakes, do I have money for that, right? So you just want to carve that out. The more stable you can get with your cash flow, if you know I'm going to dedicate $50 a month to my business, the better off you're going to be. That's number 2. So number 3, track what you spend, not to just pay yourself back or to see if you're losing money, but to understand your buying decisions and get a sense of how much you need to break even in your business. What you're going to find is you're going to have a series of different things. You're going to have things that you bought that you didn't need to buy. We all do it. You're going to have things that you spend money on every single month for your business. And then you have things like these one-time costs. Maybe it's like an annual cost for your website or something like that. You're hosting, right? So you have like these kind of monthly reoccurring. You'll have like these 1 year or kind of like one-time purchases. And then you're going to have like just like things that you bought like a one time that you probably won't buy again, but you used it that time and maybe you thought it was a bad idea afterward and you canceled your membership or whatever. So you just want to see what your buying habit is, because the goal is to get better at knowing what you need to buy, so not buying the wrong things, right? The second is understanding what you spend money on regularly, because that's your bread and butter. That's what you need to sustain your business. So you need to know how much that is. And then you need to look at the things that you buy annually or once in a while and how much that expense is, so you can kind of break that down over a year and like save up for those expenses, right? So those are the 3 things I would really do. Create a 6-month goal in number and how much money you want to make. I would then look at how much money do you have in your budget to even spend on your business, and then I would track actually what you do spend. Like just every week, just write it down. You can take your receipts and whatever and write it down. And I'm not talking about like Excel and massive formulas. I'm just saying like write it down. Get a sense of what you're spending, get a sense of how you're using your money. It's going to help you make better decisions over time, which is one way to save cost, right? One day is to make more money, and one version is to reduce the cost. And you can do that when you understand more about how you spend your money. So I wanted to share a little bit of a story here. I met with Janae. She's a business owner. She's like about 8 months into her catering business, and she has spent the first 5 months basically just reinvesting all her money into her business. And she was basically doing everything on paper, like estimates, invoices, receipts. And even though she could like use her email, she really wasn't like sending stuff out via email. So a lot of her customers were saying, "Hey, can like you just email me the invoice?" So she would like scan it and then email it, or she would just like snail mail it to people, like. And so, which is crazy in this day and age that you're going to be like mailing people invoices that you could email and get paid 10 times faster. So she was also just investing in postage and envelopes while she's still also paying for her email provider, right? So like she's spending money on both sides and it's not really serving her. So finally she just did some research and she ended up, I think it was like $350 she spent, and she got QuickBooks. And she paid for the tutorial class with that. And then she just walked it through and she's like, oh, this isn't so bad. And I can just use this to send stuff. Now, I use Wave Accounting. So I'm saying a lot, I use Wave Accounting. I'm going to put the link below. I've been using them since I started my business. I think they're free for business owners, for small business owners under a certain number of employees or a certain number of dollars made per year. I've always used them. I really like them. I didn't go to QuickBooks because I felt like QuickBooks, again, was overbuilt for what I needed. I didn't use 90% of the functionality that QuickBooks had. So I just use Wave because I can send invoices, I can do reoccurring payments, I can do all the dashboards and the visuals of my money. It connects to my bank account. Like it gives me all my business statements, like my balance sheets and like everything. So It comes with like just like QuickBooks, there are like Wave certified accountants that can work with you for your taxes, like all that. So I use Wave Accounting. She ended up using QuickBooks. All good. All to say that like she ended up switching over to that kind of tool. Um, and like that little step like freed up so much of her time. It streamlined her accounting operations. It could have connected to her bank account. She no longer had to keep all the receipts to give to her, to organize. She didn't even have an accountant at the time. And most of all, she just was able to satisfy her customers when they told her just to email an invoice. She could just easily do that and track how long it took to get paid back and all of that stuff. And it eliminated her postage and her mail. So she saved money twice with a little upfront investment. But if you don't know how much money you have in your budget to spend, you won't know when or if you can make that investment when you need to, right? So I want to just talk through some kind of high level things before you even go into QuickBooks or Wave Accounting or any kind of tool to manage your finances outside of Mint.com. I'm going to do a whole video on Mint.com. I mean, I don't use it anymore, but I used it for many, many years in my life. And if you are not at the stage and space yet to go into a financial tool for your business, because maybe you're an LLC, your personal money is mixed up with your business money, blah, 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 blah. Mint is maybe a conversation we should have again. But if you decide, which I will talk here from this perspective of if you are making money in your business, you definitely want to get some kind of tool. But here are some mindset things to think through. And if you say, I'm not yet really, after I say all these things, you say, hey, you know what, Dom, I'm just not ready to get a tool. I'd say, consider Mint.com as a tool that you can use and it's not going to give you all the functionality of a business. Like you can't email invoices or whatever, but it will help you track your money and see how you spend your money, which actually be really, really useful before you even go into another tool. So I want us to talk through like 3 or 4 things here around things you should be thinking about and framing around how to understand your money before you go into getting a tool. So the first is you want to identify all the payments, reoccurring or not, that are going through your personal bank account and your personal credit card. So if you actually are making sales and you're spending money on your business and maybe you're an LLC, I would highly recommend to first identify all the things that you're spending money on in your personal bank account that should be shifted over to your business account. And then I would work to slowly move those expenses over to your business account. So a good example of that is like, okay, I have a landing page tool that I moved over to my business account, so it gets paid automatically to my business account. I have a website tool. I have a webinar tool. So all those things get paid out through my business account. What doesn't right now, for example, is my Amazon account. When I buy something from Amazon, it's tied to my personal bank account. So now I have to like take that thing and like move it over and notate it on my business side, right? So I just want to first just start by identifying all the payments, and particularly the reoccurring ones that are getting paid through your personal bank account and personal credit card. Then you want to work to move them over to a business account. Now, I personally use Citizens Bank. I used to use TD Bank, but TD Bank charged a fee if you were under a certain minimum in your business, and I've had my business account for like 7 years, and it would be annoying because businesses don't play. They're not like personal accounts. Like if you are below 0, you will get like a fine every single day for like not hitting, like every day or every other day you get like a $35 fine. They do not take it back, and they don't care about your misunderstanding or that you messed up or you forgot or whatever. They don't care at all. So I switched to Citizens Bank because their business credit, their business checking and savings or whatever had no minimum balance. So if I was at 0, I didn't have to worry about it. Now I haven't been at 0 for a very long time, but it was helpful because TD Bank was like, I was losing money in my business just paying back TD Bank because I was like under the threshold. I was getting fined for being under the threshold, and they had an annual fee of like $8.99 or something. I had to pay like $8.99 a month, and I couldn't go over a certain amount. So it just became like expensive. So I switched over to Citizens Bank, which has no annual fee and no minimum amount, and made my life a lot easier. So that's kind of the first thing. So look at your reoccurring payments and try to move those into your bank account. When I say move, what I mean is like set up a connection between your personal bank account and your business bank account, where you can say each week send over $20 from my personal to my business, which will cover the cost of these things I've been paying for under my personal account that are now under my business account. So now that my webinar tool, which is the $100 or whatever it is, $100 a month, let's say, is in my business account, I want to make sure I move $100 from my personal to my business account every single month to pay for that if I'm not making any money in my business. If I'm making money in my business, it should pay for some of those things. But you might still have to, for the first couple of months or years of your business, use some of your personal money into your business money. So you might say, okay, I'm going to set up an automatic transfer where it moves my personal money to my business account once a month for $200 is going to cover all those payments, right? Okay. So you want to first do that. Second thing you want to do is create a business account. Notate that Citizens Bank credit is different than their checking, and their credit card is not as flexible and normal as you would do a personal account. So just notate that. But either way, they do have a credit function. And then the third thing I would do is check your bank account each week to look at revenues and expenses. So again, if this is where our tool will be great, because you can easily just look on a dashboard and it'll tell you how much you spent and how much you made each week. It's just going to give you a good sense of how you're doing, and it will help you prepare and understand the ebb and flow of cash. Maybe you do make enough money in your business, but when the money comes into your business, it's not there when you need it to be to pay the bills that you have. So you might need to supplant that money with personal money, because you just know, like, yeah, I made $500 this month, but I needed $700, or I needed $300 of that by the 15th, and I only got $300 of that by the 20th, so now I'm in the negative. So I need to buffer $200 to cover that difference, because the day the money's taken out is more than I have, even though at the end of the month I'll have all of it, right? So you want to be thinking about, how can I manage some of that? And so a dashboard is great. That's why a tool like Wave Accounting is great here. If you're not doing that, that's okay. It takes 10 minutes to go just look in your bank account and go, how much money did I make? What came in? Add it up. And what did I spend? Add it up. And just see where you are. Just pulse check, see where you are. The last thing I'd say is every month, just look at your personal bank account or your personal bank statement and credit card statement. And just check to make sure there's nothing on it that should be on your business card. Uber rides, Amazon purchases, lunch meetings, like all those things should be moving to your business account, and you want to just see what trends exist that you can start to move. If you know that you're taking a weekly meeting and you're always driving to this certain place, you can start to now move that into the business side and make sure that you just transfer your money from your personal to your business to cover that. But it's going to make it a lot easier when you have to do your taxes and such to have everything under your business account. One people fear is that they fear that they want access to their money. If they move it to their business account, they won't have access. So a lot of times when you're LLC, you just mix up your business and your personal money. But you really don't want to do that, because one, you don't want to have the negative charges for your business account that you don't have the money in there that you need to have in there to pay the bills. And two, you want to understand how your money is spent, and you want to make sure that like legit business expenses are living under your business account, right? It's going to make things easier in the long run. And when you first start out, it can be easy just to do your taxes like as a personal plus, like if you do like TurboTaxes, like personal plus business for like LLC folks. But within a couple of years, like you're going to want to make sure that you have a separation there, and you're going to want to move things to your business slowly. So you talk about growth and scalability. Understanding your finances is such a core part, because there is no long-term growth, sustainable growth, without having a strong financial core to your business and understanding and healthy financial model and a revenue stream in your business. So you can grow all day, but you're gonna also fall if you don't actually understand the finances behind your business. So I want to now talk through a little bit about kind of what we call like our lesson of the week. And it's really about planning. So we talked about growth and scalability. We talked about the finance side, prepping for the finances. Let's now talk a little bit about the plan itself. And so I wanted to say out loud, people will ask you like, hey, what's your 5-year plan? What's your 3-year plan? What's your 10-year plan? I don't give a shit about your 5-year plan. Sorry. I may say I care about your 5-year goal, right? What you want to create in the world. What do you want to see for yourself? I think those are important things. But what I really care about is your 6 to 12-month plan. Like for me, I'm doing my financial modeling around an 18-month plan right now, right? So it's a very kind of concrete plan, though I have a 5 and 10-year goal. So it's all about what you're going to do now. And before you get any fancy tool, you have to get organized in your mind. You gotta get your mind clear. And you gotta write down your list of expenses, thinking through what you have to get done over the next 3 to 6 months or whatever timeline to make your plan. Right? So if you aren't able to get clear about the number of sales you want, and you're not able to chart a clear path toward that, then how the heck are you going to know how much you need to spend or make or save to get there? You're not. So you can't talk about your finances without understanding your plan. We talked a little bit about how to think through your finances to help balance and check against your plan. But at the end of the day, if you have a 5-year plan, what you're telling me is what you hope to have happen. What I'm talking about is what you know will happen. What you know will happen most likely is going to live in that 6 to 12-month period. Yes, you might have a strong opinion and belief that I'm going to get to this point in 5 years, and I'm going to go for it, girl. I get it. But when it comes to like, what are you going to do to get there? If that's all fuzzy, right? That's going to be a problem. And I want to separate this idea here, because a lot of times if you're into law of attraction and those kinds of things, you might be like, no, no, no. I mean, you don't want to focus on the how. You want to focus on the what, meaning you want to sit there and say, here's my goal all the way out here. I want to get there, right? And I'm going to leave it up to life and energy to get me to that goal. I'm less concerned about the how. That is true. However, when it comes to belief, you want to sit there and say, well, for me to get to this goal, here are the things that I'm going to start putting into action what I think is the best path. I'm not going to be fixed to that path, meaning something new could come in, I could change my mind, I could change direction. But if I have my eye on the prize and I'm able to start doing something, the gap between where I am and where I need to go will lessen. So it's important that when you're talking about a 5-year plan or a 5-year goal, that you're able to look and say, well, I know I want to make this much in this much time, and here are the kind of things I think I'm going to start to do to get there. I am not fixed to these things, but if they prove to work, I will continue doing them. If they prove not to work, I will pivot and do something different, right? And you want to have that clarity in your mind, because when you use a financial tool, it's supposed to help inform your decision making as you move forward. And without that sense of like, I have clarity around where I'm trying to go, and I have a sense of what things I want to do to get there, not I have a fixed, perfect list of what exactly is going to happen, but no, I have a plan of things I know I need to do to help me get there. That if you can start with that perspective over the next 3, 6, 12 months, and you start working and chipping away at that, it's going to come into fruition for you. So I want to just notate that before you get QuickBooks, before you talk about project management, all this stuff, you got to get really clear in your mind about where you're going and some ideas on how you're going to get there. And you have to look at your plan for 3 or 6 months and chart out some real explicit tasks that you know are really important. You might not know all the detail, but you have to know what you think is really important to get you to the goal. So I wanted to share that, close that out. Just make sure that before you get into project management, before you get into hiring a team, before you get into all the things, that you're really clear on the goal, you're really clear about how your money flows, and you're really clear about how you're going to kind of get there, what the big things you got to do to get there. That's going to help you build growth and help you scale your business. So before I answer some questions from Facebook, I just want to remind you all that if you have any questions about your business growth or strategy, please leave them on the page with the hashtag #DearDom, and I'll try my best to answer them during the show or the next show. So my first question is from Shauna. She's a professional life coach and finds her workload overwhelming at times. Oddly, finding clients is not the problem. It's managing the paperwork and deliverables she finds difficult. She has even been embarrassed that more than once her clients have asked her to send them their invoice. Like, hey, can you invoice me for the work you did, please? Right? How could she stay on top of all the work without hiring someone? So I think this just speaks to this idea of like less is more. If you're running a shop by yourself and you're not prepared to hire someone, you have to start looking at what am I doing and how can I streamline what I'm doing or do less to do and create a better result. Oftentimes when we start missing deliverables, we're just trying to do too much. And we really have to slow it down, and that can be frustrating because we might have these financial goals and these business goals that we have to reach to quit our job in 6 months, and oh my gosh, but what we're actually really doing is hurting ourselves because we're not building the right systems and structures behind our business to be successful over the long run. So it's really important that I would say, to Shauna, like maybe you have to reduce your client load, or maybe you should reduce the scope of services you're offering your clients so you can just do better on the most basic fundamental parts of your business. Not the sexiest answer, I know, but probably the most real answer that you'll probably hear. You probably are doing too much. You probably need to do less. If you have the money to hire someone, can you work with them? Yeah, but it still takes time to train them, get them up and running, coordinate with them. It's not a one and done. So yes, you can do it. It might take you 3 weeks or so to get into a cycle with that person, or 4 weeks to get in a cycle with that person. But if it works, you can do that. But if you don't have the money for that, then I'd say chill. Keep your client base, reduce the scope. Maybe you're not as available to them as you used to be. Maybe it's not anytime they call you respond. Maybe you start responding within 24 hours versus right after they email you, right? So you kind of create the space to get your time back, right? So those are some things I would do if I was struggling with doing the basic fundamentals of my business. I would just slow it down, reset expectations, create more space for me to get the work done, and manage the workload from that perspective. So I hope that helps, Shauna. Okay, so next question. Letitia. So she recently began her own recruiting company. Oh, great. Congratulations. She has a small but demanding client base. She's brought in consistent growing revenue, but the question is, how can she be sure when to bring on an employee? She thinks she's ready, but she's not exactly sure. So what I would say is you need to write down all the things that have to get done in your business, how many things that you can do, and what's remaining. And from the remaining things, that's really how you start looking at who to bring on. It's not about bringing on a whole person in the beginning. It's about bringing on project people who can help solve one initial project. As you grow with them, then you expand their scope of work and they can fully come on full time. I would not really recommend overarchingly to go from one person to hiring a second full-time person. I really start by going into a contract project level to a part-time, then to a full-time. So you slowly grow into it, because even if you are ready and need some support, you really don't know what you're looking for, what this whole scope of work is going to be. It's all still new to you. So it doesn't really serve you to go all in. It's easier to start more slowly. So I would just say start with a project person, make a list of what you need to do, write down check off what you're already doing, look at the list of things that are remaining, and see if you can hire people for the discrete task using Upwork or Fiverr or whatnot to get those things done. And if you find people that you like, you add more projects to them over time, and they start to be part of your team, which is what we do at Black Women's Guide. I have many consultants I work with on different things. I have some that stick and some that grow and some that don't, and it's okay. But that's how I work it, and then over time I start to build in more workload and increase the payments and all that stuff like that, and then all of a sudden they get part-time and we're going into full-time. So that's how I do it. So thanks so much for joining us again this week on the Black Women's Guide show. We'll post a new episode every Friday, so please come back every week to watch. If you like this series, let us know. Comment, like, share, smiley face, hearts, all the good things. It just lets me know that we're hitting the mark. And thanks for watching the episode, and we'll see you guys next week. Have a good one.